Good afternoon, everyone. Scott G here with The Simple Trading Life with our Tuesday edition of our YouTube live stream. So welcome to everyone. Let me get you pulled up on my phone so I can see your comments. Any questions you might have, anything you need, just let me know. See, we got a couple folks in here already. I will type in right here in the comments so everyone can see it. And right down there is where you will post your comments or questions. Like always, or as always, I have ES up on the screen here, which is the S&P 500, the E-minis. This is primarily what we watch to get a feel for the market. I am predominantly on a 30-minute time frame, as you can see right here. So if you're brand new and you're just kind of wondering what's going on, I'll kind of fill you in like I do always. Let me get some things adjusted here. So on my screen, you'll see this blue line. That is the 20 simple moving average. This green line is the 200 simple moving average. Those are the only moving averages that I use. These black horizontal lines here and here and here and here, those are support and resistance lines. And depending on if we come across a name that doesn't have any or might need to be adjusted, I'll show everyone how to draw them in. It's very, very easy. We primarily trade three things in here. Price action, first and foremost, support and resistance, and supply and demand. So that's why you'll see these lines and these numbers on my charts. And as you can see how well they are respected right here, and then moving up towards this one here. I've got an alert set if we get up to that level. So if you wish, you could say hello, and I will say hi back. I like to know who's in the room. Definitely give us a thumbs up if this is your first time, and subscribe to the channel and turn on that notifications bell. That way you'll be alerted anytime that I go live or we upload new content. So right now on the 30-minute, let's kind of look at today's action. Let me go back to, this was our opening candle. And I have been extremely busy with some other things today, so I don't even have opening price level drawn in, but I'll get it on here. 28.63.25. 28.63.25. So give me 1 second. I'll get this put on our screen. In fact, right before I went live, I took a scalp on ES. Just for 50 bucks. Nothing major. I mean, obviously I would have liked to got more, but was kind of up against our time limit that I had to get ready for this live stream. So what I'm doing now is I'm putting in the opening price level on regular trading hours for ES. See, we just had a few more people join us. So whenever you see a purple dashed line, that is opening price level. Now, whenever we're trading futures or looking at futures, I do it twice a day. So I do it at 6 p.m. Eastern time, which is the overnight session open. Then I remove that and I put a new one on for the 9:30 open, which is regular trading hours. And that's when we get a flood of retail traders into the market. So it's really, even though it's all the same day, it's like two different sessions. So that's why I adjust the lines. So again, I see several new people joining us. Welcome. We've got ES up on the screen. So let's go ahead and look. And you'll see right here is where we opened up yesterday, which is still this trading day, right? Until the end of this day, until 5 o'clock. Okay, now 4 o'clock is the end of regular trading hours, Eastern Standard Time. Then we have our extra time, and it ends at 5 o'clock. Then the new day, tomorrow's day, starts at 6 p.m. Eastern on the futures. Okay, so here's where we opened yesterday. And by simply, I've showed my premium traders this before. If you ever just want a general idea of what's going on with something, just do this. Just draw a line from opening price to where you're at now. Okay? Simple as that. Okay? We have been trending up since yesterday at 6 o'clock. Okay, now of course we've been above, we've been below, we've been above, and right now we're right on it. But that is the easiest way. I know a lot of professional traders that look at a whole bunch of different charts. I predominantly stick to a few charts, and I only have one up on my screen at a time. Sometimes when I'm trading, I might have multiple screens up, but usually one chart at a time. But the easiest and quickest way to know what you're doing is just whatever your starting point is. So let's just say it was yesterday at 6 o'clock. Just draw a straight line from there into up to current price, and that will show you exactly what you're doing. So as you can see, we've been trending up. I'll leave that on there for just a second, and then I'll take it off. And during the overnight session, let's see what this was. This was 4:30 in the morning. I don't know. I was asleep. I didn't get up until today. I kind of slept in. I didn't get up till about 7 o'clock, which is late for me. Most mornings I'm up at anywhere from 5:45 to about 6:15, right in there. But today I kind of slept in a little bit, so I didn't get up till about 7 o'clock. So this had already happened. So I'm not sure if there was some kind of news, somewhere else in the world, why we had this big flush. But as you can see, we just immediately recovered. Came right back up, got right back on our trajectory. Now, what I like about this, and I talk about this often, is the move up, other than this right here, the move up has been nice and steady at about a 45-degree angle. And the easy way to tell that is from the corner of your monitor to the opposite corner. That's 45 degrees. Whenever we're climbing or descending at about a 45-degree angle, that's a good solid trend that is very healthy. Meaning, barring any unforeseen news events or world events or some kind of catalyst, and like I said, we may have had something there at 4:30. I just don't know. I wasn't awake. But other than this, and you can see we got right back online, you're going to have this nice, healthy climb. And again, other than this, look what we were doing with the 20. Just gliding along right on top of the 20. Okay, if it wouldn't have been for this, we wouldn't even have been coming down to touch it. Just gliding along. Okay, that's what you like to see, especially if you're a trend trader. Now, I don't typically trend trade a lot. Now, sometimes I will momentum day trade, and all that means is I'm looking for a move that's going to last, throughout the day, and it might be several hours. In that case, I will look for something like this. Okay, I definitely will. But in most cases, I'm scalping or taking short-term day trades myself. I will occasionally swing trade. Swing trade means you're going to hold it at least overnight. Short-term swings are 1 to 3 days. A medium swing might be 3 to 5 days. A longer term swing, you're going to be holding it for multiple weeks, maybe even months. But again, let's get back to ES. Okay, our dominant trend has been to the upside. We started at this level, 28.2750, and that is not a new line. Okay, that just happened to be right there's where we opened. Okay, so that's not a new level. That level was already there. Okay, all of these levels were already here. Then we came up to this level. Okay, you can see it was respected. We dropped away. Again, as violent a move as that is, I almost have to believe there was something that precipitated that. But then we just very quickly recovered, came right back up to this level. We based. See this base right here? Okay, so we would call this a rally base rally. So we based. Then here was the opening candle of the day. Okay, we moved negative just a little bit. So I was watching this morning, and I was kind of expecting we were going to go up. I didn't have a number in mind. I didn't, it wasn't like, hey, we're going to go to 28.95. Nothing like that. I just kind of had a feeling we were going to move up. So when we saw this initial move to the downside, those in my room know, and if you're brand new, it's the first time you've ever been with us, you'll hear me talk about this a lot. On the opening candle of the day, typically the first move, okay, and this happens a lot, like 80, 90% of the time. The first move is the opposite of the direction they're going to take it. Okay, that's typically big money trying to spook the retail traders out of the way. Okay, so it moved this way. I was watching it in real time, and I was saying, okay, kind of here's the, let's call it the line in the sand or the make or break. If it can't hold this level, okay, then the next thing would have been the 20, and if it dropped there, then probably at least down to here, if not down to this level, but we did hold. And I was watching it play out in real time. Once we got back up to opening price level, price became really strong to the upside. Okay, then we just sort of, a little bit of profit taking here, a little structure, then we moved up. Okay, so what did we have? We had a higher high, higher low, higher high, higher low, and right now we're moving up again. If we get up to this level or anywhere above this wick right here, we'd be putting in another higher high. And that is what some people define as an uptrend, right? If I'm looking at structure, I always say you got to have a minimum of 3 legs. Okay, and what is a leg? Okay, this is a leg. Up is 1, down is 2, up is 3. So that shows us higher high, higher low, higher high. Okay, got to have at least 3. So before I would say we are moving back to the downside, I would need to see what? A lower low, lower high, lower low. If I don't see that, then I would not be convinced that we're starting to move back to the downside. Every once in a while, price can flatten out, get choppy. Sometimes you'll come back and you'll test a low. You'll just test it, kind of be even with it, maybe slightly below or slightly above, and then continue on up. Or what you'll find sometimes is that you'll move back down. You'll make a lower low. Okay, so if we take this out, so if we came back down and made a lower low, then moved back up, then the critical point becomes right here. Okay, and you technical people, and I'm somewhat of a technical person, but I trade price action over anything else. You would call that a double top, right? If it came back up, couldn't break above here, and then starts back down, and then in that case, again, I'm giving you a hypothetical. Let's say it comes down in here, comes back up, can't break this level, and starts back down, then you're looking at a double top, which then we would start thinking it's probably going to eventually come back down to here, right? The origin of the double top. Okay? All right, so that's where we're at now. I already have an alert set up here. So if we all of a sudden spike and get up there, we'll know. I'm going to put, let's see, maybe I'll put it right here. I'm going to put an alert here. So if we start moving back down, we'll know about it. And we can look at some other things. All right. So the very first thing I'm going to look at today was a request by somebody in our premium room in the simpletradinglife.com premium community, and that was PSTI. So let me just type it in, that'll be quicker. PSTI. All right, and the first thing I'm going to do is go to the daily chart. We'll wait for my Thinkorswim to settle in here. Yesterday it was really giving me problems, so hopefully today it'll work well. Okay, so here we are. Okay, we had a hammer. We had a hammer the day before and we moved up. We had a hammer today. We opened in the middle and we started up. Let me see here. So we would have been triggered to go long by our rules at 950. And the high today has been 10.02. So a 50-cent move. And the person who asked me to look at this today, she specifically had asked me, I know what her targets were. She had specifically asked me about one target. And I told her, I said, if we get help from the market, I like 10, okay, which we're at 10.02 right now. And I said, possibly 10.50. We've got an hour and 45 minutes to go in the market. Are we going to get to 10.50? I don't know. Now, everybody in my room, they know I'm ultra conservative. So if I would have been in this play, I'd be exiting right here. Okay, 50-cent move on PSTI is a good move. That's a good move. So right here is where I would be exiting if it was me. Could we get to 1050, which is not that much higher, right? 50 cents, it's right up here. We could, but what is the ATR on this? Let's see here. Give me 1 second. I will bring you right along with me. PSTI. Okay, this is FinViz. This is free. I almost always have it up off to the side. Okay, the ATR on this is $1.44. Okay, so if we go back to the market, okay, now that's the total range for the day, up and down. Okay, so the low of the day is 862. So $1.44 would be about $10.06. So Kelsey, if you're watching, I would be exiting, me. Okay, this is the range. This is the average true range. Could it possibly go to 1050? It might, right? You'll occasionally have candles that are abnormally large, right? But if you look, this is about the same size as the average size candle on the chart and a bigger than a lot of the candles. All right, so we've already reached the average true range. It's $1.44. We just looked at it. So from the low of the day to where we're at right now, it basically is that $1.44. I think, what did I just say? 10.06 would be exactly $1.44. And again, ATR is not exact. It just gives you a very, very good idea of what's likely to happen over the course of a day. Most of the time, ATR is calculated over the last 14 periods. So 14 days, because that was a daily ATR. All right. So we will look at, let's look at the 30-minute. The gray area you see on my screen is pre-market. Okay, so obviously we had our dip down, came back up, settled in, pushed up, came back down. Here was our nice move. Then we sort of based sideways, and now we've just sort of been melting up from there. I believe Kelsey, the fine member of our premium room, I believe she was playing shares on this. So if she was, she really didn't have to worry about any kind of premium decay, anything like that. But in my opinion, okay, and I had 10 as my conservative target, which we've hit, and then I had 1050 as a more aggressive target. And look at this, we also have the 200 above. So is it likely that we could get to 1050 before the end of the day? Probably not. Okay, the probabilities would be against us. I see several more people have joined us, so welcome. Again, if this is your first time, please give us a thumbs up. That really helps us with YouTube. We just passed 100 subscribers. We're up to 102. So if you're brand new, please subscribe. We want to build this thing into the biggest free community for trading help on YouTube. That's our eventual goal. And we've only been up and running now for a few weeks, a little over a month, whatever it is. We've already cleared 100 subscribers, so obviously that next goal is going to be 500, then 1,000, and then so on and so forth. So again, thumbs up really helps us with the YouTube algorithms. If you could subscribe and definitely turn on that notifications bell. So anyway, that's PSTI. I definitely wanted to look at that for our friend Kelsey. Market, as we can see right there, is not doing anything. We have alerts set if it does. Let's look at a few other popular names. I always start with the A's. Let's start the other way. Okay, here's Zoom. And let me turn off the pre-market. I always have that on when I'm doing work, but it's a little distracting during the day, so let me turn it off. Okay, here we go. All right, so here is Zoom. So Zoom gapped up, sold off back to the 20, came back, and then had a nice move up until noon. Right up here, it formed this spinning top, and then it kind of sold off, and now it's catching a little bit of a bounce here. Okay, let's just do a little teaching right here. This might be where we would look to see, are we going to get a double top? Are we going to get a double top? Okay, looks like an M on your screen. So you'd move up, here's your high point, back down, back up. Now, when you're forming a double top, again, I don't necessarily trade double tops all that well, but it's good to know them for potential magnitude of a move. All right, so if it comes back up, it could stop right here. It could get up into the wick. It could get to the top. It could barely pierce through, but then it'll start back down. And then we have triggers that we look for. So the technical way to trade it is you wait until this part, okay, of the M, this part of the M gets taken out. Okay, then the technical analysis says you're highly likely to get back down near the origin of the move. All right, now we have triggers that tell us that maybe, right, only if we get a trigger, we may be able to get in way up here and then ride that down. And then if we take this out, well, then we know, hey, man, we've got a ways to go that we might be able to capitalize on. Hey, Riz, there's another one of our premium members. Good to see you, buddy. All right, so that is Zoom. Let's look at Walmart. Okay, so here's Walmart on the day. Okay, open sort of flat. Okay, just like the market. Went the other way, pushed up, came back, then had a nice strong move up, sold back, and then has been moving up since then. Now, I believe Walmart was on our watch list today. Let's double check. I'll know just by looking at the daily chart. Give me a second. Okay, yes. Okay, so it was on because of a hammer. Hey, Stacy, good to see you. Another one of our members. Okay, there's the hammer. 124.40 would have been our trigger. It's been as high as 125.20. So about 60-cent move. Probably could make a little bit of money on that. Nothing, nothing amazing, but definitely went the way we expected it, right? So when we see a hammer, okay, we're looking for an upside move. When we see a shooting star, this would be a shooting star right here. Okay, we're expecting a downside move. Doesn't mean you're always going to get it. We had a play today, and I'll look at it next. We had a play today, and I know it was on our list, Tilray, and let's just go to it. So Tilray, let me look at the daily first. And these candles are very small, so let me stretch them out a little bit for you. Let me stretch them out a lot for you. I'll make it so you can see this. Because its price action is small lately, the candles are small. Okay, so get back to my tool here. We had an inside candle, and we don't care. Okay, we trade price action, so we don't care if something goes up or down. Now, an inside candle, that's not necessarily telling us where it's going to go. The probabilities are it could go either direction. So Tilray went to the upside. It went to the upside. We would have looked for an entry around 795, and it got as high as 809. So that's not that big of a move. Not that big of a move. But I will tell you this, okay, because I did play this today and I lost on it. Okay, I got stopped out, and so did somebody else in our room. So, on just that small of a move, 795 to 809, doesn't seem like a whole lot, but I was actually up at one point, and I hate to say this, but I'm honest, and I tell it like it is, like the folks in my community know. I was actually up $120 at that point on that small of a move, and I didn't sell. Why? Because all the factors, and I'm not saying I was right, because I ended up getting stopped out for a loss, okay? all the factors said that this thing should have popped today. And what are some of those factors? I can't go into all of them because it's stuff that we do in the premium room. But let's just put it this way. There was at least four. There was at least four. And whenever you start talking about 4 or 5 or 6 factors that are in your favor, it typically makes it a high probability play. Now, on the surface, somebody could say, and I would even say this, Scott, it was a high probability play. If you were up 120 bucks, why didn't you sell? Okay, well, again, I was up 120 bucks on basically a 15-cent move, 15-cent move. So I was actually expecting the ATR on this. I'm just going off of memory. I think it's right around $1 is the ATR. So from the bottom here at 761, what's $1? 861. So I was thinking, okay, let's find 861. It's right about there. Okay. That would have meant I could have got up in higher into this wick. This wick would be an obstacle, but we never got there. Even though the market was strong. Okay, that was one of the factors. Even though the market was strong, this is all that it popped up and then it reversed. And then it came back down to 761. I got out at about 777, I think it was. 777, I believe, is where I got out. So I took a loss on that one, right? I was expecting to see more of a pop. I had a lot of factors in my favor. It just didn't work out. It just didn't work out, and that happens. But when you have an edge, that's going to be the exception, right? Over a wide range of trades, so over 10 trades, that's maybe going to happen to me 3 or 4 times. And I'm going to win 6 or 7 times. And when I win, I'm going to win at a bigger percentage than what I lose. Right? And that's called reward to risk ratio. So I'm always shooting for around a 3 to 1. Sometimes I get more. Sometimes I get way more. Sometimes I get slightly less. Right? So I'm not one of these traders. I try to tell everybody in the premium room especially, trading is not black and white. Okay, there's some traders that'll say, okay, I have a 3 to 1 reward to risk ratio. So that means when I go in, if my risk is, and I'm just making something up, 25 cents, then I'm going to get at least 75-cent gain before I exit. Well, that's just simply not true. If you trade like that, you're probably going to lose more than you win. Sometimes it's not going to make it all the way up there, and it's going to stall or it's going to start to reverse, and you got to get out. You either got to get out, break even, or maybe even with a slight profit, or at worst, stop out with a small loss. Okay, or vice versa. You don't necessarily always want to exit if you have a lot of momentum. And then let's just use that same scenario again. If your stop was 25 cents, you're looking for a 3 to 1 reward to risk ratio, and you blow right through that 75 cents. You just blow right through it, you're trucking. The first thing I would do is move my stop up to 75 cents, meaning the worst you're going to do is 3 to 1. But if that thing keeps going, right? If it blows through there, and I'm not talking about getting up there and then it starts waffling. If that's the case, you sell, you lock in your profit. But if it just trucks right on through where your take profit level was, doesn't even slow down, goes right on through, move your stop up to there and let that thing go, right? And if it keeps going, you can keep inching your stop up a little bit. There's times that I went in looking to get 3 to 1 and I end up getting 5 to 1 or 8 to 1 or 10 to 1. Right? So trading is not black and white when it comes to that. Now, there are black and white aspects of trading. Your rules should be black and white, and you should not violate your rules. So if your stop, and I don't know what your risk tolerance is, but let's just say that your risk tolerance says, I need to have a stop at 25 cents on this particular play. Then it's at 25 cents. So if it goes against you and it goes 25 cents into the negative and it hits that, first of all, you should probably have it mechanically set. But if you don't, you better exit the trade. Every time. No exceptions. Okay? No exceptions. What happens is a lot of people, they'll say, my rule says on this particular trade, I'm stopping out at 25 cents. And then when it gets there and it might start bouncing around a little bit, They're like, oh, maybe it's going to go my way. And then it moves down 2 or 3 more cents. Okay, well, it's not really diving. I'm going to wait. I'm going to move my stop 5 cents lower. And it waffles around. Then it moves down 2 or 3 more cents. And they do that over and over again. Next thing you know, they're down 40 cents or 50 cents when they could have been down 25 cents and done. Okay, so that's when trading is black and white. All right, let's look at some other things. Let's see what Twitter did today. All right, Twitter was definitely on our list. Didn't give us much. It went. It was an inside candle, which means to us it doesn't matter. It could go up or down. But by our rules, we would have triggered at 28.67, and it only went as high as 28.73. And then it would have stopped us out quickly. Now, we do have a scenario where we can play it the other way. And the other way wouldn't have gave us a whole lot either. Okay, and you don't have to. I mean, there just is a scenario where you can play it the other way. All right, so Twitter, not a whole lot. Let's look at Tesla. Did Tesla do anything today? All right, Tesla, also an inside candle. Also went to the upside, gapped up. We had a trigger of 789, 79, say 789.80. It went as high as 798.92. So it gave us $9 to the upside. Then it reversed and came back through. If you would have played it the other way, it gave you $27 to the downside. Okay, so here's a trade that could have been played both ways. Now, our premium community knows how to do it and knows what the rules are. Okay, but there's one that could have been played both ways. Now, it doesn't look like that big of a candle because this is Tesla. But again, this move up was a $9 move. The move down was a $27 move. All right, you can make some money there. You can definitely make some money. Let's see here. What else? Oh, I know what I wanted to look at before we go any further. Let's see what United Airlines did today. I'm just interested because of what happened with Warren Buffett. You know, Buffett saying that they got out of all the airlines. Not much. Not much. Actually gapped up and sold back. But let's see. About a $2 range. Okay, which is okay, right? Money could be made there. But I was expecting, one way or the other, either move down significantly or even a move to the upside. And you may say, move to the upside. Well, if there was that kind of news, let's talk about that for a second. Let's go to the 30-minute. Okay, so here's the last 1, 2, 3 days on United Airlines. Okay, so here we are today. We gapped up. We sold back down right to support, and then we've just been flat the rest of the day. What can happen, all right, teaching moment here. What can happen when there's really, really, really bad news or really, really, really good news is the exact opposite of what you think. Okay, so Buffett comes out, and it was yesterday, I think. Yesterday or the day or the evening before, he announces that they're getting rid of all of their stake in airlines. And I believe, don't hold me to this, but I think he owned 4 of them, stock in 4 of them. And he says, I no longer have confidence in the airline industry. Okay, so one of the richest men in the world, who's known as one of the most savvy investors in the world, says, I no longer have confidence in an industry, and I'm pulling my hundreds of millions or billions of dollars, whatever it was, out of that industry. You would expect a total collapse. Okay, but here's what really happens in a lot of those cases. Okay, let's look here. Okay, 1, 2, 3, 4, 5 days. Over the last 5 days, and we can simply just do this like we did before, What is the prevailing trend over the last 5 days? It's down, right? It's down. Okay, now the airlines as a whole, let's see here. Let's maybe go to the 4-hour. We're still just looking at United. This will give us what we need. Okay, the airlines as a whole, and this is United, have been tanking because of what? Because of the coronavirus thing, because of the market, just all kinds of factors working against it. So now we go back to the 30-minute. Okay, go back to the 30-minute. Here we've been over the last 5 days, this steady decline. Let's think about something logically. So I'm always saying trade with common sense. If somebody like Warren Buffett comes out, I think it was yesterday, but comes out and says, I'm getting out, I'm selling my stake, we're pulling out of the airline industry, you would expect it to tank, but it didn't. But look at this. It's been moving down, right? And I'll bet you almost every airline is probably the same. Let's look at Delta. Give me 1 second. Okay, look at this. It's going to be almost exactly the same. Draw the line in. It's like we're looking at the United Airlines chart, right? Okay, so here's Delta, almost exactly the same. This is exactly what happens. Do you think a guy like Warren Buffett could sell hundreds of millions or billions of dollars of stock in just one day? No. He had to have been unloading it for a while. Unloading it, unloading it, unloading it. That's what happens. See this? Okay? That's what's occurring. Okay, big money getting out. We're steadily moving down. Then he makes the announcement. Savvy traders, you've probably heard this expression, right? Buy the rumor, sell the news. So savvy traders, other hedge funds, prop desks, big money traders, what they do is when he makes that announcement, they look at that as an opportunity to sell. So they sell, they get out, and then they immediately, and other people immediately look to start buying. So what'll happen a lot of times is you'll see this kind of a move, really bad news will come out, and in a day or two, the market, or when I shouldn't say the market, those names will start to turn around, and they might even see a little bit of a bounce. Now, I'm not talking they're going to skyrocket, but they'll see a little bit of a bounce, and people will say, I don't understand. Buffett just got completely out of that industry, says he doesn't trust it anymore. Why would the stock be flat? Why would it be going up? That's why. Because he was getting out all along. He's now out. Big money has taken the opportunity to sell some positions, and then they look, because they wait for retail panic, and then they try to trap you and take it the other way. Okay, so if you've seen that happen before, sometimes it'll happen on earnings, right? Okay, I'll just make something up. Just say this is XYZ stock, and leading up to earnings, the stock is going down and going down and going down and going down. And then they come out with bad news. Their earnings are bad. So everybody's thinking, man, this thing is just going to the basement. And over the next few days, it starts going back up. And people are like, what? What? How is that possible? Well, that's big money. That's institutional money trapping retail traders. Okay, they already have a pretty good idea of what's going to happen. And trust me, when Warren Buffett announces that he's pulling out of the airline industry, he doesn't announce it ahead of time. He would have already been dumping, getting out, right? Think about it. Why would he announce it and then get out? It would only cost him even more money, right? He's only dumping it. He's dumping it ahead of time. Then he makes the announcement because he doesn't want it to go down more. He's already lost, hundreds of millions or billions of dollars. Well, they just reported recently. What did they lose? Like $50 billion last year, Berkshire Hathaway. Okay, so he's not going to announce it first and then dump, right? Okay, so anyway, common sense. I just want you guys to kind of get a feel for things like that. All right, let's look at some other names. All right, what are we looking at? SPY, which is going to be moving very, very similar to the market, because it is the market, right? It's just the ETF. Okay, so just like the market, it's going to have that same similar pattern. Stitch Fix is showing a little bit of strength today. Regeneron. Okay, so I know they had some good news. They had an upgrade today. So let's see where they opened. They opened at 563.06, and they were as high as 581. Okay, so pretty good day, right? Pretty good day. Almost $17 for Regeneron, and then it just sort of fizzled out. Let's look at the daily. Yeah, see the big gap up? So all we're seeing, and the market is starting to go down, so we'll go back to the market here in a second. This big gap up, then it went up on strength. Okay, so this was the after hours. This is where institutional money was buying it up. Okay, and then retail opens up and goes even higher. Okay, Regeneron. Okay, so let's go back to the market. That alert is telling us that we're moving down. At least I think that was the one that went off. Back to our 30-minute. All right, here we go. And let's get a little bit closer. All right, so here we go. What did we talk about? We could not break through. You see this? So what did we do? We moved up, okay, topped out, came down, moved up again, back into this wick. We've topped out, and now we're starting to go lower. So if there was some sort of trigger, okay, you could be looking at a downside play, or the rule of a double top is that you wait for this to get broken right here. Okay, which makes sense in this case for sure, because that's a hammer. This wick, right? This wick could be an obstacle, right? We could move down into this wick and then see some other sort of bounce before it tries to go lower, or it could support it and we could triple top, right? It could get down into this wick, okay, support it, come back up, and then triple top and then move down, right? So you don't want to try to outguess the market. You don't want to try to outguess it. Plus, look what we're trying to do here. If I extend this, and there's nothing magical about this line. This line's just telling us what's already happened, right? Now we're starting to move back below that uptrend. Remember that single straight line that we drew at the beginning? It's trying to move back below it. Now, if it moves back below here and holds, and then we try to go lower again, we have to get under this first. This wick showed a lot of buying pressure, and that's what sent us up here. In fact, here's where I got my scalp earlier before I got ready for the call. Okay, I got my scalp based off of this. Okay, now we're trying to move back down. And I'll talk about that for just a second. So just like we had a shooting star here and we moved down, we had a hammer here and we moved up. Again, predominantly, especially in certain locations, shooting stars are bearish and showing weakness. Hammers are bullish and showing strength. Not every single time, okay, right? You can have one countered by the other. So sometimes you'll get a hammer, you'll start to go up and then come back down and form a shooting star, and then you end up going lower. All right, but in most cases, when you see this, if you see the top of it taken out, that's a bear or a bullish sign. And we did. We got a nice little move here. I was only scalping. In fact, I switched from this to a 2-minute chart, and I took the scalp, and it was just small. I was actually pretty happy because today, for whatever reason, the premiums have not been moving like I would like to see them. So I got a several dollar move and only made 50 bucks. That's it. And I was only as high as 62.50. So it wasn't like it went way up and pulled back. I caught it up near the top, but as it was moving up, it was just kind of creeping up, creeping up, creeping up. When it does that, instead of really getting a pop, if you get a pop and you're playing options, like I play options most of the time, I play shares as well. But when you get those pops, an option price really grows quickly. So sometimes, like yesterday, I scalped a lot yesterday, and I would have scalps of just a few dollars and would make over 100 bucks. But they were quick pops, plus price was moving a little bit quicker. Remember, today's not an expiry day. So expiration days, you're going to get more movement in the premium. Tomorrow will be an expiration day. So if I have time, I really didn't have time today. I was working on a lot of stuff. If I have time tomorrow, I'll probably try to scalp more like I did yesterday. I like to scalp more on expiry days than non-expiry days. Okay. Let's look at some more. Let's look at Apple. We'll kind of go back through the other direction. See what Apple did. Okay, gapped up, steady move up all day long. Look at this. That's a nice day for Apple. Opened at 295 and has been as high as 373. So over a $5 move and nice and steady. Nice and steady. See that? Other than this first candle, that's what you like to see, especially if you're playing shares. Okay, options trader might not like to see that. But if you're playing equities, if you're playing shares, you'll love those kind of moves. Why? You can be relaxed, right? You're not getting whipsawed back and forth, just a steady climb. Look at that. All green until right here. Green or dojis. Okay, very nice. Very nice move for Apple. Okay, AMD. Okay, gapped up, sold down, recovered, okay, and then just sort of kind of get a little bit choppy here. Gapped up, sold down, recovered, okay, then a little bit of chop. Okay, AMD. Let's see here. I just want to eyeball this. 52.50, 50. Not much overall range today from AMD. Okay, Amazon doesn't look like it's doing a whole lot. We'll just skip right over it. Let's see what Baba's doing today. Baba's one of my China names. It's on my watch list because it's a China stock. Pretty tight. Okay, nice gap up, but look at the range. 198. Just eyeballing it. 190. A little bit more than I thought. That's about a $4 range. You can make money on Baba in that. Okay. Baidu, Biogen, Beyond. Let's see Beyond. And okay, so Beyond has earnings, it looks like tonight. Is that right? Yep, tonight. Beyond. So typically the day before earnings, whatever the move was, it usually flattens out the day before. You know, you should be a little suspect if you see a really strong move one way or the other on the day of earnings. Like today's the day of earnings, it comes out after. So if you saw the market, Beyond, like spiking to the upside, knowing that earnings are coming out after, I would be suspect about that, right? A lot of times what they'll do is they will ramp something up because they're anticipating the fall, or vice versa. If you ever see the day before earnings, a stock is just absolutely dropping and there's really no reason why other than everybody's starting to say, oh, well, they must be going to have bad earnings. Then the earnings comes out and they're earnings are either in line or better than expected, and then the next couple of days the stock ramps. But this is typical right here. This is typical. Not a whole lot of movement. It's actually up, but that's mostly because of the gap. Okay, so it's up on the day $4.89, but most of that's because of the gap. See, we're actually flat on the day for regular trading hours because it opened right here, and that's about where we're at. Okay, so that's beyond. Let's see if anything else in here catches our eye. We'll move down through. Dominoes. See what we got with Dominoes. DPZ. There we go. Look at that. Look at that move. Okay, so it gapped up, flush down. Man, you want to talk about trying to get rid of retail. Look at that. Big flush down here to the 20, recovers, and it's all been strength since then. So let me look at it on a daily. Give it a second here. Yeah. This was, yep. This was one off of our watch list. So it would have triggered at 371.20, excuse me, 362.44, and went as high as 371.20 today. So almost a $9 move. And look, it's still going because it's up at the top right now. It's up at the top right now. Very nice with Dominoes. Okay, so this was one off of our watch list, and this one, if somebody would have played that, that would have paid off nicely. Took out the top of the inside candle. Our trigger would have said to enter at 362.44, and it went as high so far as 371.20, and who knows, could go even higher. Very nice. Facebook. Let's see what we got on Facebook. Okay, gapped up. This would not have been on any of our watch list, but let's look here. Not quite a $4 range. Okay, that's not terrible on Facebook. Nothing really to do down here. Gold, Google up $41. I'll bet you a lot of that's probably a gap. Let's look. Yep. Okay, so it would have gapped up to here and opened at 1337, and it has been as high as 1371. So that's a pretty good move. That's a pretty good move. I thought most of it was the gap, but not really. Okay, Home Depot. And I do believe this was on our watch list today. It was. Let me get a little bit closer so you can see better. Okay, so what we had here was what we call an outside candle, meaning it was this candle was completely outside of this candle, taking out both sides. That tells us, okay, from a price action perspective, that a range is starting to expand. Oh, look what we had. We took out this. So this would have been a trigger at 224.95, and it's been as high as 228.56. So about $3.50 move to the upside. Okay, so nice play on Home Depot. This is straight off of our simpletradinglife.com watch list. I put it out every day. So those of you who are watching, if you follow me on Twitter or Facebook, and I put it out in the free room as well, I just don't give you all the reasons that all the names are on there. The premium room knows, but I give the watch list out so other people can see and follow what's on the watch list. Excuse me. A little bit thirsty. Okay, let's see. We've had some people coming in and out, in and out. If you're new, welcome. Please give us a thumbs up, subscribe to the channel, help us out, turn on that notifications bell, and you'll get notified whenever we're live. Okay, so that was a good one, Home Depot. Let's look here. J&J, I think, was also on our watch list today. Soon as my Thinkorswim. Yep. Inside candle, which was also sort of a hammer. We took out the top. Our trigger would have been 149.10, and we've been as high as 150.78. So what is that? $1.68 to the good. Right? You're not going to probably get out with all of that. Maybe make $1.50, $1.40. Okay, but that's still going to be pretty good on Johnson & Johnson. As you can see, the candle sizes, right? It's fairly normal candle size. So another winner right off the watch list. Let's see here. Oh yes, NetEase. NetEase. This was on the watch list, and this was a big winner from this morning. So inside candle. We don't care which direction it goes. Look at that big gap up. So our trigger to go long would have been at 341.80, and it went as high as 347. Let's look here. 347.55. 55. So almost $6 that direction. Okay. And the low was 339.37. Okay, 339.37. All right. Okay. Netgear. NVIDIA. Let's take a look at NVIDIA. Okay, NVIDIA. Do we have an outside candle there? We did. Okay, so this was probably on our list. And we would have had a trigger at 295, so 295.50, went as high as 327, so not quite $5, almost $5 to the good, and it looks like it's still pushing to the upside now. Okay, so another one. Oh man, look at Paycom. Let's take a look at Paycom. All right, not on our watch list, but still a good move. Gap kind of came back a little bit and then has been blasting to the upside. Oh, let's look here. If somebody was playing it from the open, they probably could have caught about $7 or $8 on Paycom, but wasn't on our watch list. And Paycom, I'll show you something here. Paycom has recently broke out of an expanding range. You see this, and this is what we mean by an expanding range. Okay, to the top, back to the bottom, back to the top, back to the bottom, back to the top. Started to come down. Right here, we form a J hook. You see this? J. Shot to the upside. We broke above the expanding range. And then this is frequent. Comes back to retest it from the top side, bounces, and is going higher. Now, if it comes back and drops in, that's what we call it. We could say it would drop back into the range, and then we would look for it again to possibly come back over here, and it could get trapped back inside the range again. Okay, these are just visualizations, these lines. Although you can see they work out pretty well most of the time, pretty close, they're not meant to be exact. They're not meant to be exact. But this was definitely breaking out of the range. Now it came back, retested, and it's trying to go higher. If it takes out the top of this, we'll know for sure that this range is gone. It's no longer valid. Okay, because we would call this a break, retest, and go. Break, retest, and go. All right, play. Place, let's look at play first. Nothing. Place, this is Children's Place. Let's take a look at it. I think we had an outside candle there, but there's really not much there. We already looked at PSTI to start off with. PayPal, let's take a look at PayPal. All right, PayPal, not on our list, but still a good move. Still a good move today. Almost a $3 move if somebody would have took it near the open for PayPal. I'll get a little bit closer so you can see better. Just a lot of strength there today, a lot of strength. Qs have been positive, which that makes sense because the market's been positive. All right, let's go back and look at the market. Let me go back to the 30-minute. Okay. And let me squeeze it in a little bit. All right. So since we've been gone, look what happened. Put this hammer in, right? Because this is what was happening. It was red. It was red when we were here last time. Now it's pushed back up. Okay, let's see. Okay, is it going to be able to hold and try to go higher? And if it does, where would we be looking to go? Okay, to this level right here. Let's just watch this for a minute. Let me get a little bit closer in. Okay, make it a little bit easier for you to see. All right, so if we take this out, let me stretch it a little bit. Just trying to make it easier for you. Okay, so the high is 28.8975. So if we took out 28.90 to the upside, there could be a potential scalp up to this resistance level at 28.95. So we'll kind of watch it and see. We'll see if we get any kind of a play here. Anybody watching, if you've taken any good plays, you could type it in the comments. We always like to hear about some good plays. Okay, so we're just watching this right now. We'll see if we get anything across the top here. Okay, by our rules in the simpletradinglife.com community, there's nothing to do here unless we take out the top of this hammer. Okay, we don't try to front run trades. We don't try to guess, right? Okay, when this first formed and this opened up here, somebody could have immediately tried to jump in thinking, okay, I've got a bullish signal, I'm going long. All right, now so far, right, they'd be in the red because all this candle's done so far has went against them. Doesn't mean that it won't turn around and come back up, but we wait because the higher probability is once this has been taken out. And as you can see, look at that. See? Couldn't get over this wick here. So right now, that's the key. We got to get over this wick. We got to break above and hold, okay? But this could be a potential scalp if we can get some upside momentum. Okay, we just entered power hour. We could get some upside momentum and then go up from there. I'd maybe even take it if it happens. I trade on Tastyworks. So this is what you're looking at here. This is the Tastyworks platform. So this is where I trade. So if it started to move that direction, you know, I could potentially look at taking a trade. So let me come back over to it. Right now, nothing to do. Let me do this. I'm going to put an alert right up here. Okay, that alert goes off. That'll tell me that there is the potential to go long here. And again, if I took this trade, I would just be looking to try to get a scalp right up to here. Maybe even get out slightly before. Why do I look to get out slightly before? Because you don't want to see something bounce and go against you. All right, so like look over here. Say somebody was going short here, right? And I'm just making this up, but their target was the bottom of this candle. Okay, if they tried to hold on too long, this is what happens. Boom, and a big bounce goes against you. So if you entered up here, like let's just say I'm making something up. Let's just say you entered when you broke below this level, 28.60.50. And this was your target down here, but then you got there and you're like, okay, I'm gonna hold a little bit longer, and then all of a sudden this thing bounces against you. You give back all your profit, especially if you're playing options. Now, if you're playing shares, you'd probably be able to get out somewhere in here and you'd still make okay money, but you'd still be giving up quite a bit. So whatever my targets are, say this is my target, I'm usually looking to exit slightly before it. Okay, so right now we still haven't got any kind of a trigger. Just waiting to see if we're going to get a trigger or not. Let's even look at it on the 2-minute. So yesterday and then the scalp I took earlier today, those scalps were on the 2-minute. I used to scalp a lot on the 2-minute chart. Now, the 2-minute is not for everyone. I can tell you that right now. You have to be able to handle noise, okay? And what I mean by noise is you see all these candles. Thinkorswim is really frustrating me right now. It won't stay in one place. It just keeps moving. There we go. Sorry about that, guys. It's just really messing with me today. So every 15 of these is one 30-minute candle. So look at all the gyrations over 15 candles. You have to be able to put up with the noise. Now, I can see right here, okay, taking this out, this would have been a potential scalp, and I probably would have looked to exit somewhere right up in here. Okay, but obviously I was on with you guys. So your entry is right above here. Your stop goes just below there. So you see when this came back down in, it really didn't even get that close to your stop. And then it shot up to the upside. 2, 4, 6, 8, 10, 12, 14 minutes. So let's look. That would have been 28.83.50. I probably would have tried to exit right around here. $3. So that would have been a $3 move. Probably could have made a little bit. Again, like I said, so far today, the premiums have not been moving that quick. So if I come back to Tastyworks here, because this is the platform I trade off of, what am I talking about with premiums? So like if you bought at the money, right now that cost you $800 per contract. Now slightly less than that. If you go 1 strike out of the money, it's going to be half of that. 2 strikes out of the money, so on and so forth. And what I mean about not moving, all right, so right now about a 50-cent spread, which isn't bad. When I took that trade earlier, it was a 75-cent spread. So that means you got to overcome the spread before you're even profitable. Then once you've overcome the spread, you're going to buy over here, but you're going to sell over here, right? So, but on this strike. So if you bought here right now, it's a 50-cent spread. You have to overcome the 50-cent spread first, and then this This has to start moving you into profitability. When I made that trade earlier, that was only for 50 bucks. The spread was 75 cents then. 75 cents. So I had to overcome that before I even moved into profitability. Okay, so we're getting a little bounce here. Getting a little bounce. Trying to move back up. This is on the 2-minute time frame. Now right up here, let's see, actually it's higher than that. Right there, yep. Right there is where I was talking about we would have to take it out for me to be real excited. Now on the 2-minute, you play a little bit differently, right? The 2-minute can get you into something quicker or out of something quicker, but there's going to be all this noise, right? So sometimes, like, you'll get these kind of moves where they start going against you. You just have to know, okay, where am I going to exit if something starts to go against me? Because you don't want this, right? You don't want something like that to go against you. And on a lot of trading platforms, when you're playing futures, you can't set what's called mechanical stops. So you have to get yourself out of the trade. Okay, we'll watch this for a minute and we'll see if there's any trade to take. And if there is, I might try to take one live with everybody here, but let's just see. I'm trying to look at the price action. And we kind of fell back, made a higher high, made a higher low. Are we trying to take this out here? Let's see, we would need to get to 28.8775. 28.8775. Okay, so I'm kind of watching this. This may have been just a pullback, and then we might try to go higher here. We'll see. I'm in no rush. I don't know. Like I said, up here is where I feel better. If we take that out, that we could potentially see a pop. But remember, we're on a 2-minute. This and this are part of that double top, right? Haven't been able to get through that level yet. Haven't been able to get through that level yet. So nothing to do here. Get this green candle. What I would have liked to have seen right here is this have a longer tail and then ended up in a better hammer. That right there did not excite me. Let me go back over. Okay, so this, that'd be 812.50 to take that, and about 700 to take that. 75-cent spread. Okay, all right, now this is starting to move up. Where are we at? 28.8775. Right now, I'm just not feeling it. I'm not feeling that we're getting much, you know, if this was just a pullback, then I'd like to see this really start to pop. And right now, like when we didn't get it here, and right now we just barely poked above that, and we're just kind of resting there. Okay, here we go. Maybe this is going to pop. Because again, what I'm looking at here is that we are still trending up. Even when we get these pullbacks, this is higher than this, right? This is higher than this. But what I don't like is that we're not really seeing any violent moves to the upside. We got a violent move to the downside here. Again, we're only on a 2-minute chart. So if you get into a trade right here, and then these are the kind of candles that you get, and they just slowly work their way up, you're not going to make any money trading options. If you're trading equities, you might, but then you're also waiting. Okay, but if you just get this kind of action, you're just not going to make any money. That's why I keep coming back over here and looking, okay, looking at these, and they're just not really changing. Even though the price has been going up a little bit, okay, these aren't really changing. And again, I have to buy here. I mean, I can put in for the mid, but there's no guarantee I'll get filled. And then I have to cover the spread. And then this down here, this needs to go higher than this for me to get into profitability. Okay, trading options. Oh, look at that. That's what I was afraid of. Okay, that's exactly what I was afraid of. See, the only violent moves have been to the downside. Okay, so what looked like could be possibly putting in some structure there, now this thing's starting to fade. So I talk about this with the folks in our community, in our premium community. Lots and lots of people think to be a scalper, that scalping's good for somebody who's really impatient, somebody who wants something now. They don't have the patience to wait for swing trades to play out or maybe even longer day trades. I'm just telling you, there's nothing further from the truth. I personally feel like to be a good scalper, you have to show more patience than traders who, you know, maybe take swing trades or something like that. Because look, if I was impatient, right? If I was impatient there, look at this. This would have been going against me. Okay, but I deduced, you guys were watching, I'm looking at the previous price action. Okay, the only violent type moves I see are to the downside, even though it was still moving up, right? And what did I say? I felt more comfortable if we could get back up here and break this than this move down here because of these little candles. Just little candles chopping along. And if I get in here and try to go long, boom, this goes against me. There's no way I'm getting out of that easily, right? And look at it drop. Look at it drop. It's probably going straight for the 200 here. So to be a good scalper, I'm telling you, like nobody was really watching me yesterday. I was trying to, in the room, I was putting out as many of the trades as I could, showing them, and I kind of went over some analysis with them in a private live stream. But there was probably twice as many trades I didn't take than I did. And I took quite a few trades yesterday. But I have to, and that's why I'm saying about the 2 minute not being for everyone. You got to be able to figure the noise out, right? Like I did right there. Okay, like I said, I just didn't like this action through here. Didn't make me feel comfortable, even though it was working its way up. And what did I say right before it happened? The only violence has been to the downside. Just come back through here. The more violent moves, the bigger red candles are to the downside. The green candles are smaller, even though they were going up. And then this happens right there. You don't want to be caught on the wrong side of something like this. Okay? All right. So I'm not going to take anything right now. Let's come back over here. Let's look at it on the 30 minute. Okay, so here we are in the 30 minute. We're taking this out now, okay, which if it continues to hold, if it goes below here, that starts to tell us we're probably going to get back down here, right? And then there is your double top because you can go slightly higher. Okay, did we go slightly higher? Well, actually, we just went right to it, went right to the top. Okay, there is your double top. It's moving down. It's trying to take this out right now. If it takes this wick out, it's going to have a really good, it can get to here. This could be an obstacle, plus the 20 is there. But if it gets through there, it's probably coming all the way back down here. Right in here. Okay, and look, there was our hammer, right? So in most cases, somebody who tried to front run that right? They tried to front run that, they'd be in trouble. Right now they'd be like, oh, why did I do that? Why didn't I just wait? Why didn't I just wait to make sure it was going to get taken out to the upside? That's what my one alert was up there. Okay, here it goes. It's still moving. Riz, are you talking about this right here? Are you talking about that? You can let me know. That's what I'm talking about right now. This is actually a bullish signal. Okay? That would be considered a momentum hammer because it's coming later in the trend. Right? So definitely would not have looked at puts there. Yeah, no. No way. No way. Okay. Yeah. So some people call them hanging men. Okay. And again, all I do is play probabilities. What I'm telling you is if you take the time and you go back through and look at chart after chart after chart. Now, here's what happens. Okay. We were having this conversation with one of the other members in the room last night. I'm going to spread this out a little bit. You see something like this and you say, oh, okay, well, I should go short right here, right? But if you go through and take every single hammer that you find, okay, now here, right, here it went that way, but I'm telling you that had to be some kind of an event right there. Here we're just getting towards the end of the day, and I don't know, maybe some kind of news event did just come out. But when you look at something like this one and this one, people will say, oh, look, see, that's a hanging man. That's telling you that you should go short. But then what they do is they ignore all the times that this went long. And it will go long way more than it will go short. It will go long way more than it goes short. All right, that's why I didn't take it. Okay, from a probability standpoint, you know me, I only play the highest probabilities. And there we went right back to the 20, which is confluent with these two candles right here. Okay, we said this would be our first obstacle. But that's why I don't take it. By all means, if you want to take it, I know Sonny in our room, he likes to look for this. And there's other people who might like that. By all means, if you feel comfortable taking that, go ahead. I'm just telling you, if you do enough research, you'll find out that when you see these, even in the trend like this, even in the trend, the majority of the time, that's still going to be a bullish signal and price is going to continue up. Okay? So that's why I don't play it. I'm just going back through, looking. See, these are the only two I can find. Just in that I haven't looked, real far, but these are the only two I can find here. Okay, now we're getting a little bit of a bounce right here off the 20. Let's see if the 20 can hold. Now again, the 20 is being confluent with these two candles right here, which this was a base before it went higher. Okay, so we would expect to be some support in here. So it's catching a little bit of a bounce. We'll see if the sellers try to regroup and push through, or if this is going to hold. And we've just got a few more minutes that we'll be on here before we get off, but you guys could watch once we do get off and see, does this hold or not? Okay, we knew this would be the first obstacle right here. Okay, then the next obstacle would be down here around opening price level in the 200. So you have the 200 and you have opening price level. So if this would break, that's where you're going to drop down to next. Okay. So again, look at the 30 minute and then let's go back to the 2 minute. I want you to see the difference. Okay, look at all these different candles. Now, of course, my Thinkorswim decides to go crazy. It's just started doing this again. It used to do this all the time. It just started doing this again in the last, I'd say, week or so. I don't know. And I saw several of the people in our room that use Thinkorswim to trade. I guess they were having problems today. I didn't really see, I didn't dig too deep into what was going on, but I saw several of the people in our room who use Thinkorswim to trade saying that they were having problems with Thinkorswim today, trading from a trading perspective. Okay, but all of these candles in here, again, you could count back. Every 15 of these is one on that 30-minute chart. You see how clear the 30-minute chart is. All right, that's why I predominantly trade off of that, because you got to do a lot more work mentally. Okay, I was able to figure it out and not get myself in trouble, but you have to do a lot more work on a 2-minute chart than you do a 30-minute chart. Okay, so here's where we were catching the bounce off the 20 on the 30-minute. So if we squeeze this in, squeeze this in. Okay, and then we hold a cursor across there. You can see this would have been those two candles that we looked at on the 30-minute, right? This would have been those two candles. And then also the 20 was right there. Here, I'll just show you. I don't have to tell you. I can show you. So back to the 30-minute. Okay, these two candles right here. Okay, when we're on that 2-minute, you see all that stuff over here. That was those two candles that, oh, excuse me, right here. These two candles right here. And then that's right where we stopped, right here at the 20 and these two candles, and got that bounce. Doesn't mean it's going to hold, but it is bouncing there for now. We got a little bit less than 3 minutes on this candle. Hey, Chin, I see your comment. You're having the same exact issue on Thinkorswim? Is that what's going on? It's nuts because, like, they just go through phases, like where, and it's why I quit trading on there, because I can't depend on them. So I don't trade on their platform anymore. I still use their platform for charting and analysis. Yep, I see your comment. I still use it for charting and analysis, but I just can't trust it to trade on it anymore. Okay, here we go, trying to break through. There's the break. And we're almost down to the 200. Okay, now we were watching this in real time. I say this to my members all the time. This candle may end up as a big red candle, right? Or, you know, it may end up bouncing back up here. But in real time, you know how much it struggled right here at the 20 and with these two candles right there. Sometimes when you go back, right, and you see a candle like this, you don't know, okay? If you didn't see it in real time, did it have a struggle here? Okay, now I don't know. I was asleep at that time, but we know in real time what a struggle this was. to get through there, right? Came down to it, bounced back up into here, kind of hung out up here for a while, then moved down, kind of hesitated, and then finally broke through. Okay, now it's trying to get down here, which, like I was telling you earlier, this would be your next obstacle right in through here. You've got the 200 and you have opening price level kind of influence there. But yeah, going back to Thinkorswim, I mean, I thought there for a while, for a few weeks, it seemed like things were starting to work better. The charts were starting to be smoother and not getting all wonky like that. And then just in the last, I don't know, I'm going to say 3, 4, 5 days, it'll just take these spells. They'll work fine for a while, and all of a sudden they get really slow. And then they just start moving around on their own. Like you guys can see, I'm not even touching anything, and the chart's bouncing and moving. And then there'll be other times where this really frustrates me too. I'll put a name up in here, up in this box. I'll put, let's just say TTD, and I'll hit it, and it'll bring up a totally different chart. But yet it'll say TTD up here. That's another one. That gets really frustrating. I was doing some work the other night, some research. Oh, there we go. See, we went right to the 200, right there. Okay. So we knew once it broke through here, this was the next likely area that it would catch some support. But I was doing some work the other night, and I was looking at different names and different charts, and I would type a name in, I hit enter, and I'd start doing my work, and I'm like, I looked over and I'm like, wait a minute, because I knew the stock I was looking at should have been, say, a $250 stock, and I looked over at the prices, and they were like $9, $10, and I'm like, it's right name up here, but definitely wasn't the right price. So then I'd come over here and click on a couple of names, and they would be right, and it would start working again. Then I would type something in, and it wouldn't be the right name again. And so I just don't know. I don't know what their issues are. They definitely need better programmers, I would say, or better tech people. But anyway, I don't want to get off the subject. So you can see right there. So we made the steep move. We knew this was our first obstacle. This was our second obstacle. We hesitated, actually caught a bounce there. We caught a bounce here. Doesn't mean that it still can't keep moving through, right? Also doesn't mean that it can't start to bounce and head back up. All right. Does anybody have any questions before we get off? I'll wait just a minute or so. We're up to our time. We usually stay on about an hour and a half. If you're brand new, check us out at simpletradinglife.com. We have a free chat room, and we also have a premium room. Feel free to check either one of them out. Make sure, again, you give us thumbs up on all of these videos, subscribe to the channel, turn on the notifications bell. All of that helps us out immensely. You can follow us on Twitter, at Free Trading Help on Twitter. We also have a Facebook and Instagram page, The Simple Trading Life, on both of those. So you can follow us in many different places. And then we do these live streams every Tuesday and Friday at 2 p.m. And we're normally on for about an hour and 15 minutes to an hour and a half. So just as right before we get off of here, looks like it's trying to test this again. I got you, Chen. I got you. Got stopped out. Okay, it's trying to break through the 200. You got opening price right here. You also have this wick in this little basing area. Okay, we had this rally, base, rally. Okay, so this little basing area in here should also act as some support. I was seeing if we got any quick spike or quick bounce, but probably as soon as I turn the camera off, we'll either break through it or we'll get a big bounce. But anyway, everybody, thank you so much for joining us today. We'll see you again on Friday at 2 p.m. And check us out at thesimpletradinglife.com. Bye-bye. Have a great day.